This is not the same set of rules that the ultra-rich are playing.
Well, some of the rules are the same. We've got low supply, we've got falling sales, but this group tends to be all cash. So it's really a matter of where they see value. And so that market has had a little more supply and more buyers because they're not as reliant on interest rates.
Scott, Robert lays all of this stuff out. I wonder if you could just give us the big picture, if you will, on what's happening with real estate at the high end.
Well, the very high end really hasn't had, I would say, a hiccup like the rest of the market. So the ultra high net worth buyers, they look at that market, but they tend to rely on their own private banking and their own assets to fund everything. So I think they may use it to perhaps get a better deal on something they're buying. So that's paramount. And I think that they know that there are great deals in times like this, so they're taking complete advantage of it.
And, Scott, the Douglas Elliman Knight Frank Wealth Report, which is out today, shows that 1 in 4 of the ultra-wealthy plan to buy a house in the next year. And lifestyle is their #1 priority. That's very different from the past, where pre-pandemic it was where your job is, where the best education for your kids are. How has the pandemic changed the priorities for where the wealthy want to live and buy real estate?
The pandemic's changed it in a way that most buyers that are looking for that second, third, or fourth home, they realize now that for the most part, they're going to spend 75, 80% of their time in the home. So that's important. So the location, the environment, the amenities, branded living is huge now with all the luxury hotel chains. They want to make sure that the experience, and most of that experience is at home, will be just as nice in any of the 1 to 5 homes they may have.
So that's why we've seen huge price increases in Aspen, Palm Beach, the Hamptons, Nantucket. What used to be considered resort communities now are kind of full-time main residence communities. I was also surprised in the report at the number of Americans going overseas. Americans right now were the #1 buyers of ultra-prime real estate in London. That's 10 million pounds plus. They used to be the Russians and the Saudis. Now it's the Americans. You see similar in Italy, in Portugal, in France.
Right.
Do you see Americans going overseas, and what's the driver there?
Well, I think the biggest driver was the exchange rate, the dollar to the euro. It made it really affordable. It was almost 1-to-1 6 months ago. So that in and of itself has gotten a lot of people and the attention over there. I think the rest of the world, in mainly Europe, you can get something there that might cost 5 or 10 times more here in the States, but over there it's really low. You almost laugh, say, hey, I can get a castle for $2 million. I think people's dreams are able to happen now. And since the pandemic, people are like, why am I waiting? I need to do this now. And the prices are right, and the properties are just exceptional.
Scott, this is the curious part for me. A lot of folks on that ultra-wealthy range that Robert talks about so much, they didn't get there by being dumb, so to speak, with their money, right? Real estate at these levels, how much do you think wealthy buyers are looking for a business-like return on their investment, as opposed to just owning something that they want to own in the luxury part of the market and feel comfortable saying that they live there or actually have the property?
Well, you brought up a great point. I think the investors, especially the ones that work with us at Douglas Elliman, they are looking for those great deals. And I'm talking commercial deals where there's a return for them, or distressed properties where they can get them on the lower and the cheaper side. I always say that in markets like this, especially markets, the commercial and retail, billionaires are made because they swoop in and get fantastic deals on them.